I'm going to make a prediction, if Eddie will give me his attention. Eddie and Maisie are doing a deal right now. That's the whole point. Yeah, it's sort of the point, I guess. My prediction is that this might be the next, call it 5-6 hours. This might be one of the most educational 5 to 6 hours of your life. There's so much interesting things happening. No pressure? No. There's so many interesting things happening in the world. Again, we were talking this morning. It really is like a new world order. And what gives us hope is always technology, productivity, and all those things, those great things. So we're going to talk about these aspects, and hopefully these are the things that we in this room can control. But we all don't know how to navigate, so we have specialists who that's what they focus on, you know, whether it's health tech or dual use. So let's all learn together. So I asked the panels a classic question, what scares and excites you, and share some insights. And I'd like to do the following, and sometimes what scares and excites you, of course, can be insightful. But by way of very quick introduction, introduce yourself, and then you'll bet clean up, Stephen. You like to clean up. Share, introduce yourself and share an insight with the view of we're in this very rapidly transforming world, and the rapidity is only increasing. So with that, I'm gonna I always like fund of funds. So I raise money. So a lot of people don't want to raise money for fund of funds because you're like, you don't get paid much. You have the long-term journey, but the intelligence that you get from fund of funds. So I'm going to let Joe kick off. Barbara, you all know from pickleball, or CNBC, or the like. Zoe is new to us, maybe not to some of you, but she was the president of Morgan Stanley. Who else has been president of Morgan Stanley here? Not too many of us have been your perch, right? Your view, your vantage point. So, and you're on to new frontiers. You'll share some of that. And everyone should know Stephen. Who does not know Stephen Burke? Does anyone has not been to our Tuesday briefing? It's okay if you haven't. Olga, you haven't made it, have you? A Tuesday briefing of 361 firm. Has anyone not made it to one of them? You've probably made it to 100, but it's 256 next Tuesday, our anchor man. So you'll anchor the panel. So I'm going to pass it off to you, Joe, but truly be insightful. Tell us something we don't know.
Well, I'll start by just telling you what you don't know, which is who I am. My name is Joe Mancini. I'm one of the founding partners of a hybrid venture fund called Front Porch Venture Partners. About half our capital goes into early stage venture capital on the fund side via kind of a classic fund to funds approach, and about half directly into companies at the early stage. Super excited to be here. This community, as I've started to engage with it more and more, is just a really authentic and interesting group of people. So I think it's going to be an amazing day. Is this the scares and excites part, Mark, or no?
Insights and or scares excites, but yeah. I like an insightful perspective.
Yeah. Insightful, I would say, it's obviously, it's a more dynamic world, I think, right now than we've lived in a very long time. It feels like every other day there's some new piece of news that's throwing us all for a loop. I focus on early stage venture. I would say when we get to the scared and excites part, I both worry as well as I'm excited about the state of venture as an asset class and the state of early stage innovation. It's been a primary driver of the U.S. economy for a very long period of time, and American ingenuity and innovation has put us, at the top of the heap globally for a long period of time. And we're in an interesting intersection in the asset class right now where, LPs are frustrated about liquidity. Assets are being concentrated amongst some of the biggest managers, and meanwhile, innovation is happening globally that's starting to put, I think, American innovation on its heels a little bit. So I can talk about a more inspiring version of where I think we go from here. But that's where I sit today.
Pardon me? Oh, hello? Yeah, hi. Besides playing pickleball, and there were two women who won, by the way, will be defending next year. Anyway, I'm Barb Duran. I wear two hats. I'm here really on the Investment Council of Penn State. I'm not staff member, volunteer. I'd been on the board of Penn State for 9 years, the Board of Trustees. Just after the Sandusky scandal, I was elected by the alumni and have been on the Finance Committee ever since. I'm on the Investment Council. And so I want to talk a little bit about the things that we do there, but also, excuse me, my other hat is I have my own firm, Wealth Advisory Asset Management, and so I invest in publicly traded equities, and that's really my specialty as an independent professional. The things that excite me most really goes along with what Dan was saying, or Bill. Joe. Oh, geez. Anyway, David. Anyway, it's really about technology. I don't think that should come as any surprise. There's lots of talk all the time about AI and what that means. We had a market sell-off about 3 weeks ago because of DeepSeek. You know, this Chinese potential competitor to NVIDIA and lots of other semiconductor players. But there's so much going on, and we're already starting to see the productivity increases that will come from businesses adopting it. And so far, in terms of businesses adopting it, probably, not even, only maybe 10% have really adopted. And we're not talking about the ServiceNows or the Salesforce.coms, but the businesses will actually implement to make their businesses run more efficiently, their sales, all that sort of thing. So that's just beginning, because everybody's looking at how do we use it, working with consultants, et cetera. But there's going to be a lot more to come and more new companies that we don't even know about yet. And that's why, like for instance, at Penn State, we don't invest directly in anything. We're just not big enough. Our endowment's maybe $6 to $7 billion if you include our operating cash. So we have a great staff, but we invest in funds. So that's the fund of funds who really have the expertise to dive deep. And we've been investing in different venture capital funds that have different areas of expertise in technology. Some of them are AI, others are other areas of technology, but AI has been a big one recently, and we're continuing to look in that space. On the publicly traded side, at Penn State, we just do indexes, which I'm always the one speaking up, like why we should do some active managers. But for my own clients, I do a lot in technology. Like for instance, I've owned NVIDIA since 2019, which had no idea it would happen as it has. But I looked up at that time, like, why did I buy it then? And it was really because they were one of the first actually using AI to help their clients run their business. And so this was the beginning of, and this is just the beginning still, even despite everything that's happening on. So, and I know I'm getting the look, but the things that I worry about really have to do with the current administration and the uncertainty being created by not knowing what's happening with tariffs. Is it more bark than bite? We don't know. We just had a pronouncement today about Canada and Mexico, or maybe it was late yesterday, who knows? And also about the deportations. We don't know. Even company managements are worried about what that could mean in terms of labor shortage and the inflationary pressures there. So there's a lot we don't know. And right now what's happened, I'm sure you've noticed the last 3 days, we've had a market sell-off, including today in the equity market. 10-year yield has come down. And I think we're now having a growth scare, which we haven't seen for a while. And we'll see how that plays out. In my view, it's probably a buying opportunity somewhere in there because the economy is still strong. It's consumer-driven, and it's the mid to high-income consumer that's driving it. And people have made trillions in the stock market. Their home prices are high, and they're employed. So despite all the noise and the frights of the last few days, I'm still optimistic on the market. Thank you.
Thank you. My name is Zoe Cruz. It's actually Zoe Papadimitriou Cruz. I was born and raised in Greece. I am what you call the American dream. 3 years before I went to Harvard on a full scholarship, I didn't speak a word of English. And if it weren't a public school teacher that took an interest as to why I wasn't applying to Harvard, I probably wouldn't be here. And I joined Morgan Stanley right out of business school. It was a small investment banking boutique with 1,800 people and 3 offices, Tokyo, London, New York. When I left in 2007, it was 65,000 people. It had offices everywhere. That's a revolution. Finance was globalizing. Overnight rates were 21% on their way to zero. 30-year interest rates, the risk-free rate of return for treasuries were 15% on their way to 1%. As I say to people, a monkey could do what we did at Morgan Stanley, and we were not monkeys. So you have to recognize paradigm shifts. And I actually think right now we're in a massive paradigm shift. There's way too much ink being spilled whether the Fed is going to ease 25 basis points. Who cares? The world is deglobalizing, fragmenting. The biggest assumption the markets are making is that we beat inflation. It's going to go back down to 2%. I could be wrong, but I believe we're not going to see 2% in my lifetime. We should worry more about hyperinflation than deflation. The US government has $36 trillion worth of debt. And so for me, what I worry about is there is not enough talk about how do you hedge your portfolio if it is a paradigm shift. And interest rates actually, the cost of capital keeps on going up and availability of it keeps on going down. If I'm right about that assumption, a lot of your portfolio is in deep trouble because that's the assumption most people are making. So what scares me at the moment, I'm an optimist by nature. I love, we are the lucky sperm club here, actually, most of us. What scares me is we are in the middle of an amazing technological revolution. But unlike, what? So it is amazing in the sense that when I look at the power of that thing, I downloaded all four, Perplexity, Gemini, Grok, ChatGPT, all four of them, and I asked them the same question, all four, and by the way, they have their own biases, just excellent. I don't need 12 research people. It's just in a second, I get the most complex answers to a question. That's exciting. I mean, I can get a PhD basically just, asking. That's exciting. Unlike other revolutions, you don't get the extreme risk of Elon, a brilliant man, whatever you want to think about his character. This is a brilliant man who has changed the world. Now everybody's talking the game, but I remember, if you look at his interviews only a few years back, he said there's a non-zero possibility humanity ceases to exist. Well, that's kind of a big risk. So the mirror image of that exciting revolution is more of us should think about humanity as a wonderful thing. And how do you preserve us being masters of this revolution as opposed to the other way around?
I'm done. First of all, I agree with most of what you said, and the stuff I don't agree with, I don't understand. So thank you, Zoe, for that crash course. I worry about debt, too, and I worry about debt being the current consumption of our future earnings. And we've gone way over our skis on that all over the world. And how we get that back is going to be a real problem. And the other thing I worry about is the lack of leadership that will make the hard decisions that we have to make to put the pain on the system that we have to go through to get the excesses out that we've built up over the years. I also share the view that the move down in rates is going to be much more challenging than the market is hoping for. As investors, if we don't get our mind around that change, that the last 15 years are done, and we're back to a normal interest rate level on the low end of what we've historically seen, you're going to have problems valuing all your assets if we don't get that right. So I think we have to change the mindset there. I do think there's elements of this administration that are not getting credit for the positive outcomes because of the delivery on it. But if we can digitize a lot of our government expenses, you'll raise the level of trust in how our taxes are being spent. They can give you a whole different mindset towards government and deliver much better outcomes for our country, but I think it will be the same for other countries. Europe has a massive fiscal problem where their needs are far greater than their ability to spend to meet those needs. And that's not just on defense, it's on their regular day-to-day living. So I think the transformations that are going on, I do think this is one of those periods where we've slowly walked into, over the last decade, big secular megatrends, whether it's demographics, whether it's the tech boom. You can go through the list. There's several other areas where we're seeing these megatrends. I think the anti-immigration bias that we're starting to see is another worry. We're going to have a brain drain problem. We've already seen it in a lot of countries. The U.S. cannot afford to lose the opportunity, the edge that we've had in immigration, and we're on our way to doing that. So I think we're going too far in the pendulum all the time. I think we have to get back to a more moderate way of seeing how we deal with all the problems that we have. So I'll stop there, Mark. Turn it over to you.
What do you think about the risk of humanity? So Armin Sarkisian, he did this conference. He how long, wasn't it just a question of existence? Can we, sort of existential, the ultimate existential question?
I'm surprised they made it this far, so that's not a priority for me, but I do have 4 kids that it is a priority for. And I would say that I worry about our kids. I worry about we call it sending the bill to the kids' table with the debt and the strains on the system. But I also worry what we've done to their future. I think their ability to have hope is not the same that we had when we were growing up. And I think that's a real problem, because without hope, and hope in our leaders, it's very hard to get out of the problems and deal with the problems that we have.
Fair enough. Well, I'm going to open up, because I asked Insights and with Scares and Excites, you sort of answered those questions, but did you hold back a Scares and Excites answer?
I held back an Excites.
Okay, let's
hit Excites.
Yeah.
And that was really interesting. I appreciate. This is a really smart crew up here. Like I said, I play in the early stage venture world, primarily in the U.S. I spend all day, every day with fund managers and founders. I would say something that excites me, with as concerned as I am about certain things, is how many founders are starting businesses right now in an AI native way. And what I mean by that is, they're building these businesses now with AI tools in their pocket that are going to dramatically, I think, decrease the amount of capital needed to build a great company, right? Which means that as an investor, there's an opportunity for great returns. Peter Walker at Carta has a great stat around the average Series A employee count. 2 years ago was 18. Last year it was 13. It's ready to be under 10 within the next 12 months. So in terms of productivity kind of carrying us out of this, I think there's a huge opportunity with this next set of tools, not just as a system layer for a lot of things that we do, but for founders and people who are creating and building things, and for our kids as they're creating and building things. So Mark, that's the more optimistic.
So do you know Esther Dyson? Does anyone know Esther? So we had this discussion about this time last year about companies that are the founders being an AI and the board members potentially being AIs. I don't know if you guys have thought through that scenario. But it's well, they would love to replace you too. So it goes both ways.
I mean, some might as well be AI in certain cases, right? I mean, particularly at the board level, we work with a lot of boards as well, and there's some sleepy boards that might be better served being AI, right? We try to avoid those types of situations.
So let's open it up. Will.
First off, this was awesome so far. I really enjoyed what you guys all said. A lot of brain power up there. We've talked a lot about uncertainty of geopolitics, global war, where interest rates are going. I'm curious, from an investment perspective, it's sometimes easier to think about what are the things that are not going to change amidst all this, and what will continue to just make sense. And I'd love to hear what you guys think about what's not going to change, and how we could invest in slow, boring things that aren't going to change.
Who wants it?
Can I mean, it's
Yep.
a great question. Sorry. Yeah, it's a great.
He was being coached by Depender, right?
It's a great question. I'm not sure I have the answer to the question you're asking. one thing will never change is basically if you have short-term clarity on what's going to produce cash, even if inflation takes 5% of it, who cares? That's never, arithmetic, simple arithmetic, so good businesses. But I would say what's also not going to change, some of the best money I've made is after the crash. One of the best trades I've made, because I know how to read bank balance sheets, in '08, after the world fell apart, you could have bought, if you had enough cash saved aside and not prematurely invested all of your portfolio in things, you could have bought B of A stock at 50 cents of its book value. This is a company that was still making billions with an S every quarter. So what's not going to change is we know after major, and I think we are in a paradigm shift, you don't need to be a great investor. You're going to pick up great companies. You're going to make investments that give you a symmetry of risk reward. Most great investors basically have, so yes, you can lose half of your money, or you can make 100x. That's a symmetry of risk reward. You should do that trade every day. I think right now the asymmetry of risk reward is against the traditional portfolio. Stocks and bonds. When you can actually say if there is inflation, the huge debt that the market, sovereign, in particular the US of A, everyone is actually printing money, including even Germany. Basically, when there's huge debt, as I say many times, people forget there is only two ways of big debt: repudiation or inflation. We're choosing the latter. So that should guide your portfolio. Now, the Argentinians don't have a reserve currency, so if you choose inflation, your currency goes down 98%. Turkey, 60%. We are in a wonderful world of America with a reserve currency. The question is, we better be careful.
I just want to make a comment on that. We better be careful about the reserve currency, because when we froze central bank in Russia, it suddenly woke up a lot of other central bankers to say, hey, maybe the treasuries aren't so safe after all. So it'll be a long-term process, but we can't take for granted. The near term, yes, we'll be the world's reserve currency. But over many years, and depending how it's accelerated or not by various administrative policies, current or future presidents, that is something to watch. And I share the concern over the deficit, which looks like it's going to be even higher. But what will not change? There's so many ways to answer that. One is about consumer spending, that Americans love to spend through thick and thin. And also market psychology, which we addressed, and which, so I said back it was '09, in February, I remember looking at those bank stocks, because a friend said, Barb, what can I invest in? And I don't give friends ideas, but I said, if you really want to invest, because she knew nothing, I said, I think it was Bank of America and Citi, which were like $2 stocks. I said, I don't know. The only thing I know is they're not going out of business. When it will turn? Was it one? Whatever it was crazy. But the only thing I knew, they weren't going out of business. So.
All right.
Yeah, and what's playing in my head as y'all are describing these situations, which I think are really good examples. It's just, supply and demand, as far as I can tell, is always going to, rule every market and just about every transaction. So knowing where you sit in terms of, where is demand, where is supply, and ultimately where is price, right, can help you make really good decisions. Simple, but I think we go back to it all the time.
By the way, is Maisie here? Of course, she stepped out. But we'll talk about pricing. Perfect timing, because we're going to talk about large pricing models. That's the next OpenAI that we've been looking at. Lots of hands were going up because you guys have asked lots of questions. I'm going to let Dave.
Thanks. So regarding rare earth and critical minerals, we're sort of hearing now that if you haven't already gone into them, you're late, that they're not going to be very rare in a very short period of time. Do you guys have views on that?
You mean Greenland and Ukraine? No views from the panel on that one?
don't know enough to.
No, I don't know enough either. And don't forget the ocean, too. That's a big.
Oh, the ocean. We have two people in the, Alyssa, where's Alyssa, and Lisa on ocean research. We know so much, we spend so much more in space, not in the ocean. Chris?
Thank you guys for your time. I guess firstly I would say both my dad and I went to Penn State for our undergrad, so we are, and I'm Greek, so zito elada.
Go blue.
Yeah. Oh wow. So I guess a lot of discussions I've had with other family offices, and I think Stephen, you had mentioned this idea of a lack of leadership and its effect on making crucial decisions. I think that the Obama administration was the last 2-year term we had for a president, and I guess you could argue that Trump is a two-term president, one time separately. This political climate that we're in now, and this paradigm shift politically, I think, where every 4 years it's a different president with a completely different outlook. What effect does that have? Like kind of some of the things you guys are discussing about the deficit and being able to make crucial decisions.
We do have elections every 2 years too that impact this.
Yeah, I'll start. I think the ping pong match of the parties' policies is a terrible waste of money for the U.S. Consumer and taxpayer. And I think we need to separate the budget out to a maintenance budget and investment budget the same way you would in a corporation. And then you would evaluate the return on your investment for your, like the infrastructure plan that was absolutely necessary. But you do that in a way that you actually look for an ROI the way you would in a business. And I think if we did that, the people would have a lot better response to the government spending and new government projects. So I think that's the kind of leadership that you need. You also need people to step up and say, I'm going to be a one-termer, because what we need to do is the stuff that is the hard stuff. We're going to have to raise taxes and we're going to have to cut spending. You can't avoid the deficit problem that we have. You can't grow out of it. We tried that for the last 15 years and all we did was make the debt worse. We avoided a financial crisis, but we just might have prolonged it instead of completely avoid it.
I would say that we're focusing on the politics, the Democrats, Republicans. I think the Democrats pretend they care. The Republicans say they're going to do the right thing for the economy, but neither of the major parties really focus on the one thing. The economy is no longer working for large swaths of the population. And if you read history, they pick up the pitchforks at some point. That's what's happening. To me, Donald is the pitchfork, saying he's a disruptor, we're going to throw a bomb, tabula rasa, let's start all over again. So the amount of ink that's being spilled on Obama versus Donald versus, at the end of the day, the reason Donald won is he had a great storyline. I care, I listen to you. With globalization eviscerated your town, your middle class America, you're poor, I'm listening to you. That resonated. Now, what's going to happen if 2 years from now he's not listening is what I worry. Society is fraying, not because Republicans did the wrong thing or Democrats did the wrong thing. We're not focusing on fundamentally when you have, I think I read a statistic that's, again, I believe in capitalism, but we're not practicing it any longer. When you have three guys, Bezos, I think Zuckerberg and Elon, the three are worth more than the bottom 50% of US of A. Think of that statistic.
That's crazy.
Yeah. So I think, I talked to a couple of you, I think the caucuses we should have is what is the purpose of leadership, but to actually get to our children, leave our children. I have 3 amazing children. I'm ashamed of the future I'm leaving them. My generation is the most selfish generation of them all. My dad fought in World War II. They were starving. And here we are, my generation, I need, I want, I have to have. So I think that's what has to change, not Obama versus whatever.
Well, all very interesting.
You can applaud.
But I think your question was really how does it affect your investing? and how to think about it. So on a more granular level, it does affect. I mean, you had, leading up to the election, you had the Kamala plays in the stock market, you had the Trump plays, and after Trump won, then you had, all the areas, whether it was financials, materials, everything running. And so you do have to be cognizant. And of course, now, as I mentioned earlier, there's all this policy uncertainty, which certainly is, impactful, because the Fed is on hold, and probably may hold a little longer till there's more clarity, because they are worried, if you deport too many people, it could hurt labor, inflationary, and tariffs. And so we don't know yet. So there is uncertainty that you have to build in. Now, interestingly, there just was out yesterday the second consumer confidence report from the Conference Board, and last week was University of Michigan, big drops in consumer confidence in terms of inflation expectations. But interestingly, there was quite a disparity, as we've seen in other surveys, between the Republicans and the Democrats. Democrats were much more pessimistic about it all. And Republicans, even though that number went up, they were not. So it's very interesting how either they're hearing separate facts or they're interpreting or focusing on different things. So this politicization that Zoe's talking about, is real and is harmful, in terms of making informed decisions.
Question? Yep, Tony? Hold on 1 second.
Zoe, I want to go back to something you said. I think you touched on concentration of wealth. Most people are focused on chasing the return based on what's happening in the market, and a lot of that has to do with technology. How do you properly address that concentration?
I hope this time around it will be different. When you look at the history, this time it's different. When you look at the history of capitalism, again, the best system on a relative basis, you have huge growth, plateau, collapse, start all over again. That's how it. So you look at, the 1920s. I'm rereading the Great Crash in 1929. You look at the parallels of robber barons, concentration of wealth, Gilded Age. I mean, so you look at the pattern, and my hope, again, is that we don't have this collapse. If people say, if you put your money in equities, you'll make money. Yes, over the long decades. If you put your money in equities right before the crash in 1929, it took you 40 years to make your money back, or 30. So to me, I would say right now there's not enough really risk management. How do you change the concentration of wealth? I hope it's not by, I hope that those guys that are worth trillions don't figure out how they go to Miami to save taxes. They figure out how you actually use technology. And again, Elon, to be fair, even though I think he's a deeply flawed human being, but I have enormous respect for his IQ, he started talking about, again, years ago, when you listen to what he was saying, and that's why, by the way, they had this, you should have OpenAI, why he supported it. He said we should have the minimum income. I don't know if that's the right answer, but he thought about if 65% of the US economy is consumption, which means people have a job, they make money, and then they consume. That's America. So when you have all of them now say, productivity, you're going to need to fire millions of people, we don't need them. And this time it's not the machinists, it's actually the lawyers, the accountants. So again, we're not thinking about the paradigm shift. I am hugely positive about what will happen if we survive at the land of plenty. But I hope the transition, which was World War I, World War II, is what transitions were. This time, hopefully, it's different.
I would just add, Mark, I think the thing that's going to help the inequality is, can we use technology to make the access to education better than it is right now for the low end? Because 49% of the spending in the U.S. is done by the top 10% of earners. So the others don't have a shot. They just don't have a shot right now. And the way our educational system works in many states, it's driven by tax revenues, particularly real estate revenues, and that is the definition of inequality. So I think we have to fix the educational access to allow them to have a shot to compete, because we're not giving them the shot they're not starting on an even playing field to begin with.
So what we haven't talked about is the global, the geopolitical. We talked about Democrats and Republicans, but we're in a shifting world. You talked about the dollar and our debt loads, but how do you see, I guess, what scares and excites you on the geopolitical fronts?
I'll start just the same thing, inequality. You have a couple countries that are dominating all the discussions and all the influence right now. And it's the US and China primarily that are sucking the wind out of the air out of the room. And they're not leaving much for the rest. And as we're carving up the world, we're creating a real problem with that. I think you have inequality on three levels. I think you have it on a country level, you have it on a corporate level, and you have it on an individual level. And we have to deal with all three of them for this to get it right.
What I'm excited about is that it's possible to have the Chinese leadership and the US leadership meet to say, if actually humanity is what we're trying to save, maybe we work together, as opposed to, because the nuclear arms race is now the technology race, that the Chinese and the Americans are actually fighting so they don't lose. On a technological revolution that they recognize they can lose control of. So my hope is those two guys meet, and then we get to the land of plenty faster.
Do we have like this new enlightened, mutual assured technological destruction?
Yeah.
And that we should be enlightened?
Yeah, because I mean, I'm sure there are people that are telling both Donald and Xi that there is a scenario we all die. I mean, there is. We all know that. And so right now, externally, at least what we are hearing and reading is what they want us to hear and read. Those two are the superpowers. The unilateral, whatever you call it, the world where America was the only one. Yeah. So those two guys, I think there must be at least initiating discussions. Russia and all that, it's a human horrible toll. The two leaders that need to get together, the two that count, that can change the trajectory of the world, is the Chinese and the Americans.
Okay, and I worry long-term about shifting alliances. You know, the U.S. it may not be seen as a reliable partner, and certainly Europe, basic leaders in the last week or so have said we've got to go it alone, and that will shift alliances all over the world. You've got Canada, Mexico. We'll see where that shakes out, and you know, I think longer term it could weaken us and our ability, you know, to withstand all sorts of global pressures. The fact that we've done so well the last few years economically, all these things. Again, this is longer term. This will take time to shift, but that's what I'm concerned about. What's being set in motion now? So what that may lead to, and it may not be good for us.
Joe, take us home.
I'll tell you a thing that I probably shouldn't say that I actually wish had been a little less certain for a period of time, which is, I don't know if folks noticed the news story about a week ago that there was a 3% chance in 2032 that a meteor was going to strike the Earth. Right? And then we got a better look at the meteor and we're like, it's 1.5%. And then we started to look back in history and we're like, something hit, you know, the northern part of Russia in 1908. It wasn't that big of a deal. And now we're saying, it's probably not going to hit, no big deal. I wish that had stuck at 3 to 5% for a little while longer, right? And just tried to bring the world a little bit together around, okay, this is madness, but we have an existential threat. We can see it through a big giant telescope. Let's get the best minds together to try to figure out what to do. Unfortunately, now it's like 0.1%, and we'll probably be fine. So.
All right, with that, thank you to our kickoff panel. Zoe, can I ask you to stick around? Can you stick around? Yeah. We're going to talk about AI, and two of my panelists are not here. and I thought you might keep sharing some.
Stick around for half an hour.
There you go. That's a half an hour panel. All right. So if thank you. So Ben and Maisie, Jack is on an airplane. Watch yours. Please come up. We're going to talk about AI. And if you and maybe Ben, you'll go first. Introduce yourself. Again, share. Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.